Hi guys, welcome back to the quarterly workshop. So in today's Q3FY24 result analysis, we're going to be doing action construction equipment called ACE, also called as ACE. Now we saw that last quarter, that was in Q2FY24, there were two things, right? One was the company had increased its guidance for cranes. Now when you look at their business model, you see that 70% of the revenue comes from cranes, and not only that, they have a huge market share there, right? So here they had given earlier the guidance was to grow by 18 to 20%. That is in Q1 and Q2, right? And in Q2 they came and they revised the guidance के like हम लोग cranes में we will grow by 25%, right? So that is what they had revised the guidance. And other thing was we saw that there was an inventory buildup, right? And of course the inventory buildup made sense because Q3 and Q4 are the best quarters relatively, or H2 is relatively better than H1. So as a result there was an inventory buildup. So let's see how the result has been, and has ACE been able to live up to that. So first thing is, again, I think overall any investor in this company knows, I think right now they're so used to ACE being, ACE over delivering, just underquoting and then over delivering. And I think right now it's become a norm for ACE investors. So again, coming back to the numbers have been no less than exceptional, right? Excellent set of numbers. If you look, revenue has grown on a 37% on a year-on-year basis. On a quarter-on-quarter basis, if you see, it has grown by 12.4. You see the PAT also has grown by 88% on a year-on-year basis, and on a quarter-on-quarter basis it has grown by 19.3%. Similarly, you'll see that PAT margins, which it was 8.2% last year, same time last year, it is right now 11.3%. So even EPS also has gone up by 90%. EPS also has been at a similar rate compared to PAT. So overall, anything that it needs to clear your checklist, it does clear the checklist exceptionally, and it's been a consistent performer for many quarters now, right? And let's see how the segment revenue has been, because ACE, if you look, they have four segments. One is a crane segment, one is a construction equipment, the other one is material handling, and the last one is agricultural division. If you look at the crane segment, which is a huge part of their book, you will see that itself has grown by 43% on a year-on-year basis. Even the margin also is good there. You will see that the margin is around 16.24%. When you come to the construction equipment, even that also has grown by 45%. Now coming here, you will see that I told you, right, the management had revised the guidance to grow by 25%, and you'll see crane has grown by 43%, like over and above the guidance. Similarly with construction equipment also, even there they had told the construction equipment can expect a growth of 45 to 50%. That is what they were aiming for, and that is what they have done, while maintaining the margin there also at 11.7. When you talk about material handling segment, even that has grown by 9% and maintaining a margin of 16.3. Agriculture division was flat. If you look at it, it was a hard I think the revenue from that segment has been hardly 62.4 crore. Now one of the reasons for agriculture division is, of course, there has been the change of norms over there, and agriculture ka sales also, the equipment ka sales happens on it is very seasonal. During harvest season or right before the harvest season it happens. So overall I'm not concerned about that agriculture division, because crane, construction equipment and material handling, these are the top three, and if these are doing really well, right, and especially when you talk about crane, which is a huge part of the revenue, that only is growing by 43%. So no complaints over there, right? And of course, how can you even complain after the PAT has grown by 88%? Now the first thing let's talk about is a capex. You will see that earlier they were doing a capex, right? They were doing a brownfield capex, and one of the reasons to do the capex was they wanted to increase the capacity. So earlier all the cranes, they were getting manufactured at one place, so they wanted to shift certain cranes that are there, like this new manufacturing facility that they wanted to do, the brownfield capacity, which is supposed to commence in Q4, by the way, and that is what they've been telling for a very long time. They wanted to do high power cranes and truck cranes, crawler cranes and rough terrain cranes. This is what they were targeting. And not only that, with this new plant, forklift and the other the forklift and tower crane that is there, even that capacity can increase by 40 to 50%. This is what they were targeting. And you would have seen in their FY23 revenue was around 2,200 crores. So the company had told that they want to double the FY23 revenue by FY27. Like in 3 years, they want to double the revenue. And we saw that earlier also they had doubled their revenue also in FY23. So for them to achieve this, this revenue target that they had given, they needed this capex to be done. And the management was quite frank about it also, that they need this capex to push that revenue target. And this capex is also going according to plan only. It has already started. The commencement of production has started, but I think the full swing will happen in Q4. Now Additional to this capex that is ongoing, they have also acquired another land, an 80-acre of land. They have they have acquired it near the existing manufacturing facility only, and they're looking for this. One of the reason they wanted to do this, they acquired this land, was company का कहना है कि like whatever the existing capacity that they have and the capacity expansion they're doing, they can achieve a revenue of 4,000 to 4,400 crores. But they want to go more than that, right? And for that they need this extra capex. So that is why they've acquired the land, and of course when and they will continue to do the expansion, and we will see that. Not only this, the company has been a lot of hush hush about they're looking to acquire some companies. They want to do some inorganic expansion either in the international markets or here also domestic. It was like very, how do I put this, it was like very secretive but also not so secretive in con call. Like it's nothing that is finalized, but more or less they're looking forward to it because they want to expand even in the international markets, and they believe it will give them a huge another leg of growth also. So that is what they've been targeting, but again nothing on that pinpoint you can talk about. Now the another thing that we want to talk about is the electric cranes, right? You will see that the electric cranes are something that the company has been eyeing on for a very long time, and they have the product also ready. But the problem is, you will see that we have this CMVR, which is a regulatory board which tells what has to be the rules, how the cranes are supposed to be, like they lay out the rules for all the vehicles. So in this, what has happened, they haven't laid down the rules for electric cranes and what it's supposed to be, or the regulatory norms in the road, what it is supposed to be like. Because of that, until these rules are out, they can't get it out in commercial, right? They can't start selling them out in open. So as a result, because of this, they're not able to sell it. But I think this issue also should be over, and the CMVR rule should be drafted by the end of this quarter, that is by Q4 it should be drafted, and probably we'll see a sale of that in Q1 of next financial year. That is one thing we will have to see. Now coming back to the inventory that we're talking about, right? Remember I spoke in the beginning of this video that inventory was high in Q2. Interesting thing is, the company had told they were actually short of equipment, they were short of inventory. The demand was so strong in Q3 that they could have done even more sales, but unfortunately they didn't have enough equipment to sell or enough inventory, because you all know, right, these are like heavy machinery we're talking about. It takes very long time. So actually the company was very short of inventory by the end of December. And the another thing is, in the sense ki like jo export which is there, because they're usually targeting the export around to have 10 to 15% in their top line. Now what has happened with export is, because of this Red Sea crisis, you will see that with any export companies, right, whether it is in terms of it could be selling a rubber, it could be selling a chemical, anything. Because of this Israel-Hamas ka war, the entire freight ka kharcha jo hai, it has increased, the travel time has increased. As a result, slowdown in export also has increased, but not a really cause of concern, because you will see that domestic is a huge part of the market and it is quite doing well only. Yeah, the last thing I want to talk about is in terms of defense ka revenue, right? You will see that ACE never was like an exclusive contractor of any kind. They used to get some projects and they would execute it over a period of time. That is how it used to always be. Right now, you're seeing like defense revenue is around 2 to 2.5% of the total revenue, right? And the last time they saw one of the biggest order was for 500 crores, that too in this multi-purpose tractor. Now what they're doing, they're supplying a lot of cranes. I think recently they have started supplying the 60-ton crane, which cost about 1.5 to 2 crore each, right? And they're developing that. They've also supplied some forklift also. Yeah, around 330 units of forklift they've supplied to the defense. The interesting, and they're also working with the army to supply around 1800, that is 1800 units of forklift, costing around 35 to 45 L. Now another thing is, interesting thing what has happened is, they are developing recently a prototype. Okay, prototype for prototype, one second, I have to get the name of it. That rough terrain forklift only, they're trying to develop it. So now with the prototype, what used to happen, not with the prototype, the machines, what used to happen, that the army requires is, earlier whatever they require, they have to either get it imported, or there used to be a lot of hassle. Now they're trying to get it done domestically. One, because right now there are companies in India that are capable of doing it. The other thing is here, when you talk about this company that I was talking, this prototype, there were three companies that were competing. ACE was the only domestic and two European companies, and they have qualified into, they've done the prototype, they've shown shown it, technical round and everything is done. They're waiting now for the final order. Like if they get this order, it could be a very, very huge win. And like I told you, there were 3 companies they were competing. Out of that, Ace and another European company has quite cleared the order and now cleared the technical round, and now they're waiting for the final round. And if they get this order, it could be around plus or minus 700 crore. It could be in that range, and it will be a huge win for them also. So going forward, probably in the next 2 to 3 years, they are expecting that army or the defense could be contributing somewhere around 5%. Right now, it is contributing around 2 to 2.5%. It can double in the next 2 to 3 years. That is what they are trying to do. Apart from that, they're also supplying it to Navy also, some rough terrain cranes that are costing around 1.5 to 2 crores each. And and I think they have a huge order right now, even for that also to be supplied by Q4, right? So this is what they're doing. A lot of things are happening in terms of defense. So all in all, hope this goes in their favor again, like how everything has been over the last few quarters. So only thing remains a concern, again not a huge concern, because export is a very small portion of the revenue, but right, like they were targeting an export of reaching around 15% of their revenue, if I'm not wrong. Let me just double check it again. Yeah, I think they were targeting around 15% of their revenue in the next 3 years to get from export. So that could be a bit delayed if this Red Sea crisis continues to go, right? Continues to going forward if it continues. So the overall, if we talk about the outlook, right? The outlook has been spectacular. Again, they came and they increased the guidance for cranes. Like I told you, until Q2 the guidance was 18 to 20%. Q2 they came and revised to 25%. Now in Q3 they revised that they will grow the cranes by 30%. Again, the forklift the construction equipment by 45 to 50%. That is what they're targeting. And of course, the other material handling equipment and other things by 15 to 20% is something that they are targeting, right? Overall, a great set of numbers. The company continues to remain on track to double their revenue in the next 3 years, right? From 2,200 crores to what they achieved in FY23 to 4,400 crores in FY27. Not only that, they want to achieve, I think, around 5,200 to 5,400 crores odd by 5,500 crores odd in the next year also, like in FY27, right? In FY27 they want to do that also. So overall, a great set of numbers. Again, nothing to complain about. The only thing, let me talk finally, I'll just wrap this video up by talking about valuations. Okay, so first thing, in terms of valuations, of course the stock is not cheap. Like straight facts, the stock is not cheap. It is a construction company, it is a cyclical company that we're talking about, and it is trading right now at 60 PE, right? But one thing, if the pace of growth continues to be there for the business, right, the stock will, obviously there is not going to be any stop, it will continue to make money. But you cannot deny the fact that see, if you had bought Ace, let's say somewhere around 15 to 20 P in that range, right, you got both. First of all, the company was hitting all the sixers, PAT in terms of revenue, operating leverage, EPS growth, capex, tailwinds, ROE ka improvement, everything was in their favor. And on top of that, it was at low valuations also. So at that time, what you had both. You had the P ka expansion as well as the E ka expansion. So you got both, right? As a result, you will see the stock also, and also it was at a low market cap. So you got the market cap expansion, you got the P and E ka expansion, everything. Going forward, what happens is the rate at which Ace grew, right? The entire, you see the rate at which it grew, like when the stock almost tripled from 400 to 1200 ranges or whatever, right? You saw the rate might slow down, the rate at which it was growing, because going forward, you might not see the PE expansion happen at the same rate, because the PE re-rating happened here very quickly also, right? You might not see PE re-rate from here again, like, going forward at a very high rate. But the EPS expansion can always be there. That EPS expansion will continue to go forward. Let me take another thing also, is the forward PE. If you take, I always take forward PE of 1 year, not more than that, because let's be honest, neither you nor me don't know what is going to happen tomorrow. So it doesn't make sense to be taking 2 to 3 years ka PE, because ek tailwind headwind ban jayega, and then boom, everything collapse, right? So when you take the forward PE also, because let me just get the numbers out. Yeah, if you see the last 3 quarters, right, the PAT has been 68 crores, 74 crores and 88 crores. Now Q4 is always better than Q3. Even if I take conservatively that Q4 will be as equal to Q3 ka numbers only, so around 90 crores. Or max to max, let's say they are making the Q4 ka PAT around 100 crores. So the PAT will be, the total year ka PAT will be around 320 to 330 crores. Divide that by the market cap, which is around 16,000 crores. Your PE still comes at 52 to 48, in that range, right? Almost 45 to 52 ka range it will come, right? So it comes over there again, not cheap. You're getting it is still not cheap when you talk about 48 to 52, right? Earlier you were getting at all the check marks cleared, and a high growth 40% ka engine at a PE of 20, 15 to 20, and now the PE is literally like doubled. Now I know few folks will do the forward PE of like 2 years and 3 years and try to justify the stock is still cheap. Well, good for you. But God help you, because I mean, if you do 2 to 3, I mean, it really doesn't make sense to do 2 to 3 years का forward P, because आपको भी नहीं मालूम कि like business कहाँ पे होगा, right? I mean, yeah, revenue guidance and all is great, it is there, but having said that, like I told you, एक tailwind headwind बन जाएगा and then just khalas, just completely gone. And the other thing is, see, the another problem happens here, that ACE has been continuously growing at 35 to 40% ka, the growth rate has been in that at that rate. Now at this valuation, what happens? Anytime the pace of growth falls, I'm not telling that company will stop growing. It might do a 20% का revenue, it is still growing, right? 20% is no joke, but that 40 to 35 to 40% से वो नीचे आया ना, एक बार भी वो 25% का growth भी करेगा ना, market उसको ठोक देगा immediately. Next day बोरिया बिस्तर बांधो and you have to get out of here. You know, there is going to be no saving grace when the pace of growth falls down. Let me remind you one thing: as long as the pace of growth is there, as long as it continues to do what it has promised, doubling the revenue, whatever it has to do, the volume growth is going to be great, the revenue growth in each segment is going to be great, everything, as long as the pace of growth is there, the stock will continue to make money. And the minute, and I'll tell you this, the minute that pace of growth falls, no, everything is gone. So be careful. I mean, again, this is no buy or sell recommendation. Do your due diligence, but of course, just highlighting everything with this company is great. I think this is the only company actually, you know, for a lot of time, actually for a lot of quarters, you see, it is the only company where I think the investors know कि like अरे ये तो अच्छा ही करेगा, no problem. You know, they're so used to like, they're so used to getting, you know, over delivering on their promises. So of course, great management. One more thing I would like to highlight here, last thing. I know I've been telling a lot of last thing. You'll see one thing I really appreciate about the management here is, especially in the 2018-2019 where there was a bear market, right? And you see all the manufacturing companies going into debt, and you know, everybody's KPS का इतना volatility था. You will see ACE is the only company, you'll observe that EPS was very constant in those 3 years between 2018 to 2020, right? EPS has been at 4, I think around 4 something, right? I don't know the exact numbers, but around that range. So that also goes to show you like structurally the company is very strong, they have a good corporate governance. But yeah, that's the only thing I had to highlight. But again, wrapping up the result, great set of numbers, valuations thoda expensive hai, and yeah, that's that for ACE. See you tomorrow. Bye.